Hi guys, good morning all of you. Welcome back to CAP classes. So I'm very happy to start this 10-day fast track super quick revision for CA Intermediate and IPCC Auditing and Assurance. Okay, so today we are starting with our first session. So a quick summary of the program. Every day 3 hours right from morning 10 o'clock till afternoon 1 o'clock. 3 hours the class will be there with a nominal break of 5 to 10 minutes in between. After 1.5 hours of class, I'll give you say 5 to 10 minutes of break and then another slot will be there. Point number 1. Point number 2. This is a 10 days program. 10 days into 3 hours is equal to 30 hours, which covers for both old syllabus and new syllabus. And it is starting on 16th November, that means today, up to 25th November. So in this 10 days, 30 hours of course, what we are going to do is, I will discuss RTP, revision papers, test papers. I will discuss model test paper. I will discuss previous year question papers. And I will share a study notes to you. And ICAI super quick revision material, whatever they have put in the website, we will do a thorough revision from that. Point number 1. Point number 2, if you miss live classes, morning 10 to 1 is the live class. Every day you can join the Zoom meeting. If at all you miss the live class, then a recorded backup will be given to you in our CAP classes Android and iOS app. So please download the app if you have not yet downloaded. So then every day morning 10 to 1 live, and backup will be provided on the same day evening. So you can see unlimited views. There is no limitation on one time it is to be seen, 2 times and all. MCQ bank will be given to you. For old syllabus, new syllabus, separate study materials will be given to you. So in some time, maybe probably by evening, you will have to fill one Google form. When you fill the Google form, we will get your email ID. To that email ID, we'll share all the MCQs, we'll share the free model tests and all. And I'm also giving, along with this program, 10 days revision program, I am giving you subject-wise test series also. You have to write 5 to 8 exams. Chapter-wise exams will be there, mock exam will be there, all these things will be there. Okay, so with this intro, shall we start with our batch now? Chalo, I am starting with this ICAI's beautiful multicolored revision material, and the first one to start with is, what is an audit? What is an audit? What is the objective of audit? Okay, I do not want to teach you ABCs. So on the board, there are 3 questions. There are actually 4 questions, but I want you to read 3 questions. What is an audit is there on the left hand top corner. What are the advantages of audit on the right hand side? What is the scope of the audit below left hand second part? So can you do a quick revision? You read it yourself. You read these 3 questions yourself. We'll start with warm up basics. We'll start with 0 level. Okay, so please read these 3 questions yourself. So guys, what we need to do is, because MCQs are also there, I will tell you important points like, bullet points or small, simple sentences you have to write. So always keep one notebook and pen with you. Okay. Write down point number 1. Basics, point number 1. This is given in latest RTP, 2020 November RTP it is given. Write down point number 1. Preparation of financial statements. Write down. Preparation of financial statements is not the responsibility of auditor. Preparation of financial statements is not the responsibility of auditor. Point number 1. Point number 2. Preparation of financial statements is not the responsibility of auditors. Point number 2. Designing and implementation of internal control system is not the responsibility of auditor. Designing and implementation of internal control system is not the responsibility of auditor. Controls over financial reporting is not the responsibility of auditors. Controls over financial reporting, section 134 of the Companies Act 2013, which we see in the Companies Act, that is not the responsibility of auditor. Controls over financial reporting is not the responsibility of auditors. Prevention and detection of all frauds and errors is not the responsibility of auditor. In brackets SCA 240. In SCA 240 and also section 143 subsection 12 of the Companies Act, that too we'll see later. They explain the responsibility of auditors, but remember one thing: if I have conducted audit as per standards on auditing, it is not my responsibility. Even if some fraud is there in the books, you cannot ask me. If it is done in a methodical manner where auditor in the normal course cannot dig it out, it is not his problem. Okay, so why I have written all these points, they are given in RTP. So, what is the responsibility of auditor? What is the responsibility of auditor? Okay, now again come back to this particular document. They have clearly given the responsibilities of auditor in this para. So, on the left hand side, can you see? To obtain reasonable assurance. So, point number 1, to obtain reasonable assurance. Okay, in brackets write down. In brackets write down. There are 2 levels of assurances. There are 2 levels of assurances. They are A, reasonable assurance. B, absolute assurance. A, reasonable assurance. B, absolute assurance. Another write down. Reasonable assurance is a high level positive assurance. Reasonable assurance is a high level positive assurance. Absolute assurance is a kind of 100% assurance or guarantee. 100% assurance or guarantee. So reasonable assurance, in brackets you can write down approx 90% and above. This 90% and above, only for your understanding I told you. Nowhere it is stated that reasonable assurance means 90%, absolute assurance means 100%, nowhere it is stated. But I am telling you for our understanding. Absolute assurance is a kind of 100% assurance or guarantee. So write down, in any audit, absolute assurance can't be given. Auditors are not expected to give guarantee to shareholders on the financial statements or on the management of the company. This is very, very, very important for MCQ. Auditors cannot give absolute assurance. They are not expected to give guarantee to shareholders. So will the company will be in profits next year? No guarantee. So auditors give only reasonable assurance and can't give absolute assurance due to inherent limitations of audits. Auditors give only reasonable assurance and cannot give absolute assurance due to inherent limitations of audit. Audit is not a guarantee as to future profitability or efficiency of management. Very important for MCQ. They can again ask, audit is a guarantee as to the future profitability of the company. Comment, wrong, false. Audit is not a guarantee for future viability. Audit is not a guarantee for future profitability. Audit is not a guarantee for efficiency of management. Audit is only an assurance report on the financial statements of company. That's all. Audit is only an assurance on the previous financials. So where we started, what is the responsibility of auditor? So from the chart, point number 1, to obtain reasonable assurance. And what is second point? To ensure that the financial statements are free from material misstatements. To ensure that the financial statements are free from material misstatements. To write answers for MCQ questions, you need to have a lot of conceptual clarity. Okay, that is the reason I am giving you this small note points so that you remember this when MCQ question is asked, you can write it properly. So, what is the second point, objective of the auditor? To ensure that financial statements are free from material mistake. Okay, under that, write down point number 1. Misstatement is a difference or a deviation in misstatement is a difference or a deviation in misstatement is a difference or a deviation in a transaction or an account balance or in presentation or disclosure requirement. Misstatement is a difference or deviation in transaction or an account balance or presentation disclosure requirements. Okay. So, for example, provision for warranty should be rupees 100 as per AS 29. The company's management provided a provision of rupees 75. This is a misstatement. A court case which has higher probability, a court case where the company has higher probability of losing the case, should be recognized as a provision in financial statements, but the company just shown it as a contingent liability. This is a misstatement. This is a misstatement. Depreciation on plant should be charged at 25%. Company charged at 20%. This is a misstatement. So I have given you some examples of misstatements. Okay. So if you look at the responsibility of auditor to ensure that the financial statements are free from material misstatements. So it is not just a misstatement. It should be material misstatement. So in the next point I am writing, auditors are concerned about material misstatements. Auditors are concerned about material misstatements. Now, what is a material misstatement? You need to apply accounting standard 1. Materiality. Auditing standard is also there on materiality. Isn't it? So, have you written? AS1 and SCA 320. So auditors are concerned about material misstatements. Then write down misstatements in financial statements occur due to frauds and errors. So why is there a misstatement? It could be because of error, it could be because of fraud. So more about errors and frauds we'll see in SCA 240. In new syllabus, it is a separate chapter also. In old syllabus, it is a part of, chapter 1 and 2, they discussed about this frauds and errors more particularly in chapter 1, and then SCA 240 is anyway there. So we'll discuss about that SCA 220 later. Don't worry about it. So the auditors verify the financial statements and express an opinion that the financial statements are free from material misstatements. That means they give in the opinion that there are no material misstatements in the financial statements. Are there any misstatements? Possible. There can be so many misstatements, but there are no material misstatements. That means big frauds, big errors. These kind of things are not there. So deviations, 100 rupee, 200 deviations, so many might be there. So I cannot dig everything. So this is point number 2. So again, going back to ICI material, what are the responsibilities of auditor? Overall objective of the auditor on the left hand side. 1, reasonable assurance. I have explained in detail. 2, to ensure that the financial statements as a whole are free from material misstatements. Financial statements are free from material misstatements. And the third responsibility is to report on the financial statements. To report on the financial statements. What is the report? True and fair report. This is called true and fair view. Okay. So true and fair view is not defined, but you might have understood already because this is revision classes. I do not want to say what is true, what is fair and all. True is basically, the true means the truth, the genuineness of transaction, the actual occurrence of transaction. Fair is like fair presentation about substance over form, accounting standards, all these things you call it fair. So overall, whether the financial statements are showing true and fair view or no, the auditor will tell. And then the fourth one is to communicate. Okay, to communicate with shareholders through audit report, with management, audit committee, and those charged with governance. So SCA 260 and 265. There are 2 standards which deal with auditors' communication with management and those charged with governance. 260 and 265. Okay, they are not there in the syllabus now. In latest RTP, if you see in the exclusions, they removed auditors' communication with those charged with governance. So it is not required. But for the knowledge sake, I am telling you. Now, this particular part is over. So guys, in the first part, we have seen, this definition and all. An audit is an independent examination of financial statements of an entity, whether profit oriented or not, irrespective of its size or legal form. With, when such an examination is conducted with a view to expressing an opinion thereon, and what are the overall objectives of the auditor: to obtain reasonable assurance, to ensure financial statements are free from material misstatements, to report on the financial statements, to communicate as required in standards and auditing. All these things we have done. This is question number 1. Now let us move on to question number 2. What are the advantages of audit of financial statements? What are the advantages of audit of financial statements? Here, I'll tell you one very important question, asked in the previous examinations. Now, remember one thing, okay? In the exam, questions can be direct, questions can be indirect. For example, I'll ask you one question. Audit of sole proprietor is not required as per law. However, many times sole proprietors appoint auditors. Sole proprietors appoint auditors to conduct audit of their books. Why? So read this question and can you tell me what is the probable answer for this? You tell me what is the probable answer for this. Do you know the most common form of mistake what students do here is they write about audit of sole trader. Use your common sense and brain. Who's asking you to write audit of sole trader? So what is wrong answer? Wrong answer is audit of sole trader. That is in your, you remember audit of sole trader is in your 9th chapter, old syllabus. Okay, so audit of different forms of entities, new syllabus. So writing sole trader audit for this question is a wrong answer. Even if you write beautifully everything about audit of sole trader also, you will get only a big 0. Because that is a correct answer but inappropriate answer for this question. That is where you lose the marks. So what is the correct answer? Correct answer is write the advantages of audit. Okay, so what should be the correct answer? Correct answer, look here. You have to write it like this. Audit is not statutorily compulsory for sole traders. However, to enjoy the advantages of independent audit. See how beautiful the phrase is. To enjoy the advantages of independent audit. Usually, sole traders approach auditors for audit of their books of account. Sometimes it can be requirement by a banker. So you applied for a loan and the banker is asking you submit audit report. Then you said legally it is not required. Then banker will ask you, even if it is not legally required, I need an assurance that your books are free from material misstatements, so go to an auditor. So that can be some contractual necessity also. Sometimes it is because of bankers, sometimes it is because of, if it is a partnership firm, sometimes it is because of partnership deed. In partnership deed, you might have written audit is compulsory. So partnership act is silent. But you know, terms between partners say this is required. So then after writing this first para, audit is not statutorily compulsory for sole traders or partners, partnership firm. However, to enjoy the advantages of independent audit, usually sole traders approach auditors for audit of their books of account. And then write down, this is because audited financial statements give more credible and reliable financial information. Audited financial statements give more credible and reliable financial information based on which the stakeholders can take informed decisions. This is how you steal more marks from ICI. Okay, so see the weight of this sentence. Normally at student level, I cannot expect you to write this heavy language and all, but this is how you get more marks. I told you so many students got 80s and 90s. Why? Because they write this kind of answers. So this is because audited financial statements give more credible and reliable financial information based on which the stakeholders can take informed decision. Now you have to write that bullet points. This advantages of independent auditors there, safeguarding the interest of persons not associated. This is LKG answer. Okay. So advantages of audit, you know, to settle tax liabilities, to settle, you know, the matters with among partners, to determine, you know, the goodwill, to calculate the dispute, to settle the disputes, trade disputes, other disputes, okay, and to apply for bank loans. All these things LKG answer. So now see this, safeguards the interest of persons not associated with the management. Acts as a moral check on the employees. Very important point. If there is audit, employees usually cannot do mistakes because they know that if the auditor comes, they will, you know, peel their skin. So audit works as moral check and helpful in settling tax liabilities and all. Then useful for settling trade disputes, helps in detection of wastages and losses because auditors will evaluate the internal control systems and then gives this kind of reports also to management. Management letter, you remember, not management representation letter. Management representation letter is different, MRL. Management letter is different. So auditors usually write a letter to management to give them what are the weaknesses and losses, and they also sometimes recommend this is how you can come out of it. Then government may require audited and certified statements. That's all. So question number 2 is over. So the next small topic is scope of audit. Do you remember there is a very interesting and important case study, Newton versus Small Arms Birmingham Limited. Sir, what you talk, sir? We do not remember, sir. In company audit, there is a very important and interesting question. The scope of a statutory auditor cannot be restricted even if the company passes a unanimous resolution of shareholders. Boss, if you are audit committee, remember you cannot restrict my scope. If you are board of directors, you cannot restrict my scope. If you are CFO, CEO, director, you cannot restrict my scope. You are those charged with governance, you cannot restrict my scope. You are management, you cannot restrict my scope. Even if you are shareholder or the whole body of shareholders also cannot restrict the scope. Why? Because the scope of statutory audit is given by law. Companies Act has given me rights, no? So who are you to take my rights away? Do you remember section 143? Responsibilities of auditor, reporting duties of the auditor, rights of the auditor, they cannot be restricted. Now, what is the scope of the audit? Scope of the audit refers to what are various aspects to be covered in an audit, what are various things I need to verify, what are my expected duties, what am I expected to perform. So the works to be done, the areas to be covered and the items to be verified in simple terms is scope of the audit. For example, look at CARO. In CARO there are 16 points, no? The auditor is supposed to answer for various questions. That is the scope of audit. You understand? So there are 5 points on the board. 5 points on the board in that violet color, scope of the audit. Patafat, read these 5 points. Read these 5 points. So friends, shall we continue? So we are continuing with the scope of the audit, okay? So just now we have seen what is the scope of the audit, and I told you the scope of the audit cannot be restricted in case of a statutory audit. Okay, so continuing that, write down in your notes, open your notebook and write down in your notes. There are 2 types of audit when it comes to legal compulsion. They are A, statutory audit, B, voluntary audit. Write down this. When it comes to legality or legal compulsion, when it comes to legality or legal compulsion, there are 2 types of audits. What are they? One is statutory audit. Okay. So second one is voluntary audit. So give me one example for statutory audit. Company audit, bank audits, tax audit, etc. These are statutory audits. Why? Because of statute, it is because of a governing statute, the audit is compulsory. Okay, now write down. In case of a statutory audit, the scope of the audit is determined by the auditor, keeping in view A, statutory requirements, B, pronouncements of ICAI in brackets write down, accounting standards and standards on auditing. Accounting standards and standards on auditing. Third one is engagement letter. Terms of audit engagement. Do you remember your standard on audit 210? Do you remember SCA 210? What is SCA 210? Agreeing the terms of engagement. So here SCA 210, agreeing the terms of engagement. So this is in case of statutory audit. Now in case of voluntary audit, since there is no statutory requirements, the auditor determines the scope of the audit keeping in view. So here if you look at A, B, C, A is not applicable here, no? So only B and C are applicable. That means pronouncements of ICAI, letter of engagement. pronouncements of ICA and letter of engagement. Okay, now let us see what are various aspects to be covered in audit and what is the scope of the audit. So look here, what is the scope of the audit? The diagram on the left side bottom. Examination of system of accounting and internal controls. One, the auditor should examine the accounting system and internal controls. Point number one. Point number two, verify the authenticity and validity of transactions. What is this? This is nothing but vouching. Verification of authenticity and validity of transactions is called vouching. Comparison of items of financial statements with the underlying records. That means sales book as per sales ledger, what is annual sales and how much of sales is put in income statement, P&L balance sheet. In P&L, how much of sales is recorded. So auditor has to trace the ledger balances from the ledger to the financial statements or trial balance. That is one. Verification of title, existence and value of assets. This is verification of assets. Then the next one is verification of liabilities. Then checking the results shown by the profit and loss. This is called financial performance. Reporting to the appropriate person or body. That is nothing but audit report. So these are the aspects to be covered in an audit. So read that once again. Read that once again. Okay, now another very important question, both for descriptive question and also for MCQs. So both for MCQs and also descriptive questions. One very important topic in audit is what are the inherent limitations of the auditor? What are the inherent limitations of the audit, not auditor, sorry. What are the inherent limitations of audit? So this is part of CA 200. So CA 200 discusses so many things including audit risk. So many things including audit risk. Okay, so audit risk can't be reduced to zero due to inherent limitations. Audit risk can't be reduced to zero because there are certain inherent limitations. Now the question is, you will ask, Pavan sir, what are inherent limitations? Now read this para. Inherent limitations. This. Okay, look here. The inherent limitations of audit, CA 200, overall objectives of independent auditor and conduct of audit in accordance with standards in auditing. The auditor is not expected to and cannot reduce audit risk to zero. This is what I have written in the notes. You have written just now in the notes. CA 200 says audit risk cannot be reduced to zero. Why? Because of inherent limitations. What is the meaning of inherent? Inherent means that which is embedded, which cannot be eliminated. Inherent means which is embedded, which cannot be eliminated. The inherent limitations of audit arise from one, nature of financial reporting. First one is nature of financial reporting. For example, management uses so many estimates. Say provision for gratuity. How the provision for gratuity is calculated? The management approached one expert, actuary, and the actuary said, create a provision for 22.5 crores. Can auditor verify that? The answer is no. Auditor is not technically competent valuer, no? And then capital work in progress. One building is under construction or one power plant is under construction. Client is constructing one power plant. On 31st March 2020, auditor looked at the property and management in their financial statement said capital work in progress 312 crores. So how this capital work in progress 312 crores can be verified? There are limitations. Auditor cannot verify, because even if auditor spends so much of time on that also, he is not a competent valuer, he is not an engineer. He cannot understand this level work completed contract, what will be the value? He doesn't know. So the nature of financial reporting is one of the limitations, because management uses lot of judgments, management uses lot of estimations. So this is nature of financial reporting. And the second one is nature of audit procedures. Second one is nature of audit procedures. Now try to understand one thing, okay? One basic thing is, I am not investigator. I am not appointed to investigate into the affairs of the company. I am auditor. The difference is, investigator starts his work with a preconceived notion and a conclusion that there are frauds in the company. But auditor starts with a clear-headedness, without any biased mind, with a clear mind. He will start with a clear mind. So I will not investigate into the affairs of the company. I will only examine the affairs of the company. Now imagine there are 210 sale transactions happened. That means the company sold goods 210 times. But they deleted 20 transactions. They destroyed 20 invoices. They deleted from the computer. They deleted from physical book. Nowhere they mentioned it. And to auditor they said, sir, only 190 sale transactions occurred. Remaining 20 sale transactions happened in cash. So there is no record in cash. They have not recorded, they misappropriated money, there is no record on any of the papers, there is no record in the computer. They have deleted everything. How auditor will come to know? If I am at least investigator or forensic auditor, I would have spent more time on it. But now, I believe as an auditor, I believe 190 transactions submitted by the management is the total sale revenue during the year. That can be another inherent limitation. Now sometimes fraud may involve some technically strong, sophisticated, very carefully organized schemes which the auditor is not aware of. Say for example, through computer programming, you did some fraud. Your client, I am conducting audit of your company, and in your company's books of account, there is one very high level language like some ERP, SAP. So in that, when you have developed a program, you have created some of the codes which will, delete some of the revenues, increase some of the expenses, which I cannot even understand. So deliberately, if management is doing a fraud, what can I do as an auditor? So this is another limitation. And the possibility that managements or others may not provide, either intentionally or unintentionally, the information relevant for audit. So I have asked some information. For example, related party transactions. I asked the management, do you have any related parties? Have you sold any goods to related parties? I have one accounting standard, I have one auditing standard, I need to comply with them. So I asked the management, do you have any related parties? They said, no sir, for our company there are no related parties. But what if the company has a related party relationship which is not disclosed? The company has one court case which is not disclosed. How will I know that the company has a court case unless the company is furnishing information to me? So simple. Again, the summary of the story is, close your eyes, inherent limitations, 2 arrow marks down. Left side, nature of financial reporting. Right side, nature of audit procedures. Left side, nature of financial reporting, arrow mark down, judgments and estimations of management that may be biased. Right side, nature of audit procedures. There can be carefully sophisticated frauds which I do not know. I am not an investigator. And the possibility that management either intentionally or unintentionally is not giving some information to me. I cannot do anything there. That's it. Then, timelines of financial reporting and balance between benefit and cost. Do you know so many, if you look at the big four like Ernst & Young, KPMG, Deloitte, PwC, many firms, many big level firms, they charge audit fee based on number of man hours. So the client is ready to pay X rupees to me as an audit fee. So when I have created the budget, I can spend only so many hours. So while accepting the audit, I will make a decision whether for this money I can conduct this audit or no. But once you accept the audit, you cannot give poor quality audit because the client is paying less money. No, the law and the courts, judiciary system will not leave you simply because if you say, sir, the client has given only 1000 rupees to me, sir, in 1000 rupees what I will verify, sir, so I did this, sir. No, never. Even if he gives 1000 rupees also, your audit should be effective. But there is always a time and cost constraint, because imagine one petrol filling station, petrol bunk. How many sale transactions will be there in a day? Imagine one supermarket. How many sale transactions will be there in a day? Hundreds of transactions, thousands of transactions. Reliance Trend, Reliance Fresh or Big Bazaars, lakhs of transactions. As an auditor, can I verify all of them? The answer is no. Can I verify all of them? The answer is obviously no. So when the financial statements will be prepared, when the financial statements will be approved by the board of directors, when the information will be given to the auditor, when the auditor conducts audit, when the auditor gives the report, for everything there is timeline. So I need to complete audit by so and so date because the company has to convene AGM by so and so date. So within that time frame, within that cost constraint, with the constraints on the resources, will I be able to do the audit? Sometimes no. That is what they are saying. Relevance of information and thereby its value tends to diminish over time, and there is a balance to be struck between reliability of information and its cost. So too much digging of the information may not be economical for you. So sometimes you accept persuasive evidence rather than conclusive evidence, and then you say, okay, this issue is over, sign. Then other matters that affect the limitations of audit. Certain assertions or subject matters are particularly significant. Such assertions or subject matters include, first one is fraud. Fraud involving top level management is more riskier. Fraud by a clerk or cashier, 100 rupees, 200 rupees is still fine. But fraud by top level management, senior management, fraud by collusion of more people, that will make the audit system fail. Top level management, if they are involved in some fraud, if you remember Satyam's case, in Satyam's case, after 7 years of fraud, the MD had to convene meeting, Satyam Ramalingarazu. He himself said there are frauds. Auditor could not even trace the fraud. That is point number one. Second one, the existence and completeness of related party relationships. This is what I told you. So if you are not disclosing your related party transactions and relationships, how will I know? Then the third one is occurrence of non-compliance with laws and regulations. So you have violated some law, SCA 250, Standard on Auditing 250. The management violated some law and they have not disclosed that to the auditor. So they received one notice from one government agency, some department, fire safety department like that, or food adulteration department, or some labor inspector. They have given one notice. The company did not even tell that to auditor. What auditor can do? Then future events or conditions that may cause an entity to cease to continue as a going concern. Something happened which is changing the company's going concern position, that if the auditor is not aware of. All these are limitations of audit, which is very, very, very important question. So shall we move further? So this relationship of auditing with other disciplines, there is one chapter, no, that is not that important. One very basic question, just you read it. I'll give you 30 seconds of time, read, and that is over. Then we'll move further. Okay, so let us go to the next question. How this auditing standards are developed, the framework and all. This is also not that important, but a quick view of the chart. Read the chart on the board. Standard on quality control, SQC 1 to 99. In that there is only one standard, SQC 1, which is there in your syllabus. Write down SQC 1, underline. In your notes, write down SQC 1, underline. SQC1, underline. Under that, write down ethical principles, fundamental ethical principles. Point number 1, fundamental ethical principles. 1, fundamental ethical principles. 2, maintenance of audit documentation. 2, maintenance of audit documentation. In brackets, write down 7 years. This can be asked in MCQ. Previously 10 years, now 7 years. Maintenance of audit documentation. 3, leadership. 3, leadership. These 3 are important from exam point of view. Whenever that comes in the document, we will discuss about it later. SQC 1. There is only one standard. In 1 to 99 series, there is only one standard. And another thing is, the beauty is, I teach international standards. I teach Indian audit. There is absolutely no difference between international standards and Indian standards. All of them are same, including the numbers and paras, it is same. There are certain differences between accounting standards and international financial reporting standards, but when it comes to audit, globally it is same. Okay. Then standards on review engagements, this is not there in your syllabus. Standards on review engagement is not there in your syllabus. Standards on assurance engagements is not there in your syllabus. Standards on related services is not there in your syllabus. All these things are deleted. They are not applicable to you. Interestingly, from final also they deleted it. Even in CA final also these are not applicable. Now what is applicable to us? Standards from 100 to 999. So this numbering can be asked in MCQs, okay? This numbering can be asked in MCQs. What is the correct series of standards on auditing? Then they will ask you 100 to 999. Okay, so now if you see, first one is introductory matters 100 to 199. No, this is not, there are no standards in this series. There are no standards. The most important is 2 series, 5 series, 7 series. For your exam, what is important? SCA 200 to 299. This is important. 500 to 599. Most important. 700 to 799. Most important. Specialized areas 800, 899. Not for CA Inter. Not for CA Inter IPCC. It is not there. So, as and when the standards come, we'll discuss briefly about the standards, and I will give you short notes for standards also. I have prepared short notes for standard, that also I will give you. Okay, now this is our SQC1. Most important area. Okay, read that elements of a system of quality control. Okay, now under that write down quality control. There are 2 standards which deals with quality of audits. They are SQC1 and SA220. SQC1 is standard on quality control. 1 standard on quality control, and 2 standard on auditing 220. Engagement and quality control standard. There are 2 standards which deals with quality of audits. They are 1 SQC1 standard on quality control, and 2 SCA220. SCA220 engagement and quality control standard. I'll tell you one very interesting thing and very important thing here, okay? SQC1 is applicable to audit firm. This is called firm level. That means this is applicable to Pavan Kumar and Company or X and Company. Pavan Kumar and Company or X and Company. So what kind of quality should be there at firm level? So this speaks about leadership, this speak about ethics, this speak about human resources and policies of recruitment of staff, etc. In general. Now SCA 220 is applicable to a specific assignment, that is, this is engagement level. This is engagement level. For example, when Pavan Kumar and company audit firm is conducting audit of X Limited or is conducting audit of, say for example, State Bank of India. Pavan Kumar and company is conducting audit of State Bank of India. So what quality control principles and standards are to be followed in this specific audit assignment is governed by 220. Interestingly, so many paras of SQC1 and 220 are same. So many paras. So they say the firm should have these policies, and they say while conducting audit of a specific entity, the firm should follow these policies. Here, SCA 220 deals with review, direction, supervision and review of audit. SCA 220 deals with direction, supervision and review of audit. So this is the basic difference you should know. Simple. Again, close your eyes, revise. Summary, a quick revision. There are two standards which discuss about audit quality. One is SQC1. This is on a global firm level. So what kind of qualities or principles or ethical values, you call it, what kind of qualities the firm should have, that is given in SQC1. When a firm is conducting an individual assignment, what are the quality standards you need to follow are given in SCA 220. SQC1 very briefly discussed in CA Intermediate IPCC syllabus, but SCA 220, my dear friends, is discussed in detail. In detail it is there. What do you mean by direction? What do you mean by supervision? What do you mean by review? All these things will come in your syllabus. Okay. Now, do you remember fundamental principles of auditors? Okay. So first read this. Leadership responsibilities, ethical requirements, acceptance and continuance of clients, human resources, engagement performance, monitoring. This is SQC1. So if you observe, I am not discussing anything about any specific assignment. In general, what should be the leadership responsibility? In general, what is ethical requirement? In general, what is Pavan Kumar and company's policy to accept audit? In general, what type of policies they are following in human resources, recruitments, promotion, selection, etc. So these are in general firm level. Got it? Got it. Now, the most important thing, ethical requirements relating to audit of financial statements. Star mark. Okay. So, ethical requirements relating to audit of financial statements. This is very important for MCQs also. Descriptively, this is important. MCQs also it is important. Okay, so this is there in both old syllabus and new syllabus. More specifically, this is important for new syllabus. This is there for old syllabus students also. This is there for new syllabus students also. But more elaboratedly, this is discussed in new syllabus. Okay, so remember the memory rule. IOCPP. Oh my God, Sare, what is IOCPP, Sare? IOC means Indian Oil Corporation. PP means petrol pump. So I purchase car petrol only from Indian Oil Corporation. Sir, seriously? No. Only for example I am telling you. So to remember all the points, we need to have some memory codes, okay? So IOCPP is a memory code. Sir, why this is, important? I'll tell you. In MCQs, how they ask, which of the following is not a fundamental ethical requirement? Which of the following is not a fundamental ethical requirement? They'll give you 4 options ABCD, in that 3 will be correct options, 1 something else they'll give you. Say for example, they have given A, B, C, and D they said sufficient appropriate audit evidence. True and fair view. Something like this they used. Material misstatements. You are like sufficient appropriate audit evidence. Sir. That you might have read 1,000 times in your life. But is it a fundamental principle? Confidentiality, is it a fundamental principle? Independence, is it a fundamental principle? Now, if you remember IOCPP, it is easy for you to remember what are that 5 points. So, what is IOCPP? The story I have given. See, you can create any story with that 5 letters, okay? I created a story that I purchased, petrol from Indian Oil Corporation petrol pump. Even in reality also I purchased from Indian Oil Corporation only. But that is none of your business now. Now, what is IOCPP? I, integrity. O, objectivity. C, confidentiality. P, professional competence and due care. P, professional behavior. Nice, no? So, first one is I for integrity. Second one, O for objectivity. 3. C for confidentiality. P for professional skill, competence, due care. Fifth P is for professional behavior. Now the most important thing is they have already asked, they'll give you professional skepticism. Remember, professional skepticism is an attitude or mindset of the auditor, but it is not ethical requirement. But in 1, 2, 3, 4 ABCD, if they put professional skepticism, half of the people have professional skepticism required. No, that is not ethical requirement. That is work related requirement. No, ethical requirement is IOCPP. You got it? That's all. Okay, shall we go to the next question? Human resources, not an important thing, but they have given, just read. The firm should establish policies and procedures designed to address the following: recruitment, capability, competence, promotion, compensation, estimation of personnel needs, career development, performance evaluation, all these things. As a firm, Pavan Kumar and Company, Accent Company, PwC, Deloitte, as a firm, you should have policies for all these things. How will I recruit? How much of manpower I want? What is the competence I look at in the person? Or when I am recruiting a person for specific post, say for example, audit manager. So what kind of audit managers I want? Do I want a chartered accountant with 5 years of experience? Do I want a chartered accountant with 10 years of experience? Or I am okay with any, CA discontinued fellow? That depends on the firm. Small firms and all, if you see audit managers are not qualified, semi-qualified people will be there. Or maybe 10 years, 15 years, they work in various companies without professional qualification like CA. They can be audit managers. But if you are a big four, you will take only chartered accountants with some relevant experience and all. That depends on, your firm policy. They are speaking about that, which is not examinable. In exam, they will not ask this. Now read the next one. The auditor should be independent of the entity subject to the audit. The code describes independence as comprising both: 1, independence of mind; 2, independence in appearance. Very interesting. Very interesting. But if you look at fundamental ethical principles, this independence is given in the next para. In IOCPP, it is not covered. Very important. In IOCPP, it is not covered. In the next para, they are speaking about the independence. So basically, they are telling you 2 points. Okay. 1, dear auditor, be independent. Be independent. 2, appear to be independent also. Very interesting. 1, be independent means you should not have any link with the management, neither financial transactions nor any dependence fee dependence or any other thing, nor any relationships, blood relationships, business connections. So that not having all these things is what your independence is. Appear to be independence. Imagine the company MD and I, if I am the company auditor, the company MD and I, we traveled in the same car to go to AGM. So in the AGM is being convened in a hotel. Usually AGMs they'll conduct in banquet halls, hotels only. So there is a big hotel. MD, CFO, auditor, all of them came in the same car. That doesn't mean I am their slave, okay? That doesn't mean my mind is influenced by them. That doesn't mean I am biased. But what shareholder feel? Shareholder feels like MD and auditor are coming in same car with hand on the shoulder. So what is the credibility of audit report? So am I not independent? I am independent, but I am presenting myself in a way that loses, that impairs, that jeopardizes my independence as perceived by the shareholder. So simple. Dear auditor, 1, please be independent, independence of mind. 2, present yourself in an independent manner, that is independence in appearance. So this episode is also over. So like 8 to 10 questions we have completed till now. Shall we go to next question? Okay, so I'll give you 1 minute of time. Read this monitoring. Can you believe with this monitoring we are completing first chapter? Super, no? This is what fast track revision means. Okay, so read this monitoring. The purpose of monitoring compliance with quality control policies and procedures is to provide an evaluation of. Again, they are speaking about SQC1 only. When you open ICA study material, there will be dozens of pages which describes about SQC1 and all. My dear friends, that much of studying is not required. So whatever is here, if you study, take my word, it is more than enough. So in auditing, the first step is you should not know what to study. First, you should know what not to study. Okay, so look here. Adherence to professional standards and regulatory and legal requirements, you need to monitor that. 2, whether the quality control system has been appropriately designed and effectively implemented. Whether quality control system as given in 220, as given in SQC1. So if I am Pavan Kumar of Pavan Kumar and Company, I am the leader of the audit firm, I have to monitor these things. Then whether the firm's quality control policies and procedures have been appropriately applied so that reports are issued by the firm or engagement partners are appropriate in the circumstances. So whenever we are giving audit report, engagement report, whether that is appropriate in the circumstance or no, followed by appropriate firm personnel so that necessary modifications are promptly made to the quality control policies and procedures. Don't worry about it, just a single reading, read that 4 points and then we are done with chapter 1. Okay, so you understand? Do you have any doubts here?